Hello everyone, and thanks for watching Edupedia World Videos. Today we'll understand how to make journal entries, and for this we will use a question. Now we will analyze each and every transaction of this question, and then we'll pass the journal entry for the same. I'm not going to use the format of journal entry, as I consider the audience must be knowing the format. So I will only use the concept behind each and every journal entry. Now for passing every journal entry, I will use the accounting equation. The accounting equation, which I have already discussed in my previous videos, is now any increase in left hand side is a debit and decrease would be credit. Increase in right hand side would be credit and decrease would be debit. Using this accounting equation, we'll make the journal entries. Now let us start with the first transaction. Before starting, let us understand how to analyze each and every transaction during the passing of journal entry. Now whenever there is a transaction, there must be at least two accounts involved. There can be more than two accounts, but there must be at least two accounts. And for every debit, there must be a credit. So the accounting equation remains balanced, as we have analyzed the transaction in our previous videos. So you can refer the video to understand how to analyze a transaction. Now I'll start with the first transaction. Business started with cash. Now first of all, let us find out the accounts involved in this transaction. There are two accounts involved in this transaction, as cash has been received in the business, so there is a cash account, and as it has been introduced to start the business, so there is a capital account. Now, as cash is an asset, any increase in cash would be debited, and as capital is a liability, so any increase in capital would be credited. So our journal entry would be cash to capital, that is 1,50,000. Now let us come to the second transaction. Goods purchased from Manisha. Now let us first find out the accounts involved in this transaction. There are two accounts involved in this transaction. First one is purchase account, and second one is the Manisha account. Now purchase account can be analyzed in two manners. Purchase is considered to be expense in accounting. this is one way of looking at purchase. The another way is, for every purchase of goods, there is an increase in stock. And as stock is an asset, so any increase in an asset would be debited and decrease in the same would be credited. So as goods purchase increases the stock, so it would be debited. And for each and every debit, there must be a credit in a journal entry. And here there are only two accounts involved, that is purchase and Manisha. So if purchase account would be debited, it is obvious that Manisha account would be credited. Amount is 36,000. Now you can also understand that as purchase has been done from Manisha and Manisha has not been paid, so it becomes a liability for the company. So any increase in liability would be a credit. So Manisha account is credited. Now we'll understand the third entry. The third transaction is stationery purchased for cash. Now we can understand that there are two accounts involved in this transaction. First one is stationery and second one is cash. Both the accounts are assets. Stationery, as it has been increased because of its purchase, so it would be debited, and cash has been used as payment for the stationeries, so there would be decrease in cash and thus it would be credited. So our third entry would be stationery account to cash account. The amount would be 2200. Now let us come to the fourth transaction. Open bank account with SBI. Now opening a bank account needs cash. So we can understand that cash has been deposited into bank, and bank is also an asset now. So there are two accounts involved in this transaction. One is bank account and the another one is cash account. And bank account, as it has increased, would be debited because it is an asset and any increase in asset would be debited. And cash account, as it has decreased and being an asset, any decrease in an asset would cause a credit. So the next entry would be bank account to cash account. Amount would be 35,000. Now we come to the fifth transaction. Goods sold to Priya. There are two accounts involved in this transaction. As goods has been sold, so it is named as sales account, and the another account is Priya account. So as any sale of good is considered to be revenue, sales are part of revenue, so any increase in revenue can call credit. And you can also understand it in another way, like any sales would decrease the number of stocks available with the firm, so that would be a decrease in asset. So in that way also the sale needs to be credited. So now we know that sales account is credited, so the Priya account will be debited, because there are only two accounts that are involved in this transaction. So our journal entry turns out to be Priya account to sales account. The amount is 16,000. Now we come to the sixth transaction. Received a check from Priya. Now there are two accounts involved in this transaction. Those are Priya account and the next one is bank account, because any transaction with the use of check deals with the bank account. So as check has been received in the bank, so there is an increase in bank account, and as bank is an asset, so any increase in an asset is a debit, as we have studied it before. So the next entry would be, and let us first start a new page. So our sixth transaction would be bank account to Priya account. The amount would be 16,000 only. So let us come to the next transaction. Sold goods to Nidhi. It's again sales account and Nidhi account. So sales account, as it is a part of revenue, it would be credited, and Nidhi account would be debited. The amount is 14,000. The next transaction is Nidhi pays cash of 14,000. Now there are two accounts involved. One is Nidhi account and another one is cash account. So as cash has been received and as cash is an asset, so increase in cash would be debited. So another account, that is Nidhi, needs to be credited. Next transaction is purchased goods on credit from Ritu. Now there are two accounts in this transaction. One is purchase account, and as purchase of goods increases the stock, so it would be debited, and the Ritu account, as we have already known that there are only two accounts in this transaction and we know the debit account, so Ritu account must be credited. So the transaction transactions journal entry would be purchase account to Ritu account. The amount would be 20,000. Now the next transaction. Insurance paid by check, amount 6,000. Now there are two accounts involved. One is insurance premium account and next one, as it has been done with the use of check, so next one is bank account. Now as it is a payment by check, so there would be decrease in bank account, so the bank account would be credited because any decrease in asset needs to be credited, and as insurance premium is an expense, so it needs to be debited because it has increased. And you can also understand it in this way, like you have already known that bank accounts need to be credited and there are only two accounts involved in this transaction, so other account must be debited. So the insurance premium, I guess, is 6,000. Let me check it. Yeah, it's 6,000. The next transaction is paid rent. As it has not been mentioned that it has been paid in check or cash, so we'll consider it to be in cash. So there are two accounts involved in this transaction, that is rent account and cash account. As cash decreases because of payment of rent, so it would be on credit side, and also rent is an expense, so it needs to be debited. So the transactions journal entry would be rent to cash. Now let us come to the next transaction. Goods given to charity costing 1,500 rupees. Now there are two accounts involved in this transaction. As it deals with goods account, so it would be purchase account, and the next one is charity account. Charity is considered to be an expense, and as goods has decreased because of charity, so it must be credited. So the next journal entry would be 12th one. It would be charity account to purchase account. The amount is 1,500 rupees. We come to the next transaction. So the next transaction is purchased office furniture that is worth of 11,200. Here two accounts are involved, that is a furniture account and the next one is cash account, as it has not been mentioned here that payment has been done in cash or check. So any payment would lead to be a decrease in cash, and any decrease in cash would be considered to be a credit, and the furniture is an asset, and any increase in asset would be debit. So our transactions journal entry would be furniture account to cash account. The amount is 11,200. Now the next transaction. Cash withdrawn for household. Now any cash withdrawn by the business owner for the household purposes is known to be drawings. A business owner can either draw cash or goods for his own means personal use, and that would be considered as drawing. And as here the business owner has drawn cash, so there would be a decrease in cash, and drawing is considered to be an expense. So increase in expense, that is drawing here, would lead to be debit, and decrease in cash, which is an asset, would lead to be credit. So our transactions journal entry would be drawing to cash. The amount is 5,000. Now the next transaction. Interest received for cash. Interest is received, and any interest received is considered to be a part of revenue, so that would be a credit, and as it has increased the cash, so cash would be debited. So the transactions journal entry would be cash to interest received, and the amount is 1200. Commission paid by check. So I skipped the last transaction. Okay, cash sales. Any cash sale involves two accounts. The one is cash account and another one is sales account. Sales account, as it leads to decrease in stock, and you can also say that sales is a part of revenue, so it needs to be credited, and cash account, as it increases because cash has been received because of sales, so it increases, and that's why it would be debited. So the transactions journal entry would be cash to sales. The amount is 2300. Now the next transaction. Commission paid by check. Now there are two accounts involved here. One is commission account, which has been paid, and because of that bank account will decrease as it has been paid in check by check. So decrease in bank account would lead to be a credit, so bank account would be credited, and as commission has been paid and commission paid is considered to be an expense, so commission account to bank account would be our next journal entry. Let us use another page now for other transactions. Okay, so we are left with two transactions. Telephone bill paid by check. Now as telephone bill has been paid by check, so one account is bank account and another account telephone bill account, which is an expense. So our next transaction would be telephone bill account, to cash account. The amount is 2000. Now the last transaction, payment of salary in cash. There are two accounts involved in this. One is cash account and another is salary account. Salary is an expense, so any increase in expense needs to be debited, and as it has been paid by cash, so cash account will decrease and so it will be credited. The amount is 12,000 rupees. You can verify all the journal entries, means if you have committed any error or not, you can add up both the side of debit and credit and you can find out if it's equated, then there would be a least chance of error. You will reduce your chances of error in that manner. So that is all we have for this particular video. Hope you have understood. Thank you for watching this video.